once again. So in today's episode, I'm just online doing nothing because the market is closed. You probably heard that a lot of work in the process of becoming a trader is taking place when the market's not actually running it up. So this is one of these times where I just think about the markets, think about possible executions, make an overall recap of what I've done, but there's nothing to be revised because this is an actual new account. As you may know, I blew 2 accounts last month, one due to bad risk management and one due to emotional trading, but only one of them was a funded account actually. This was with the bad risk management, and that is what I wanted to talk about today, because this is something you really need to consider as a new trader, and you probably watching this because you are a new trader. Everyone in the markets for a couple of years probably has a better source of educational material than YouTube, and everyone in the game a couple of years know that YouTube mostly consists of fake gurus. There are a couple of exceptions, of course, like I Am in Trading is a very good guy. He exposes other guys, and that's showing I have a chat, but I'm not even seeing the chat, so let me just watch in there. No, there's no chat. So what I'm about to say, there are a lot of bad guys in the game, and they're mostly baiting you guys, the new guys in trading, with lifestyle hooks, and they're building a relationship to you. Some are using female characters because the trading community is mostly male. Also, YouTube is mostly male if you do your market research. This is one thing actually, since I make my daily recap videos. I wanted to do this a long time ago, but I started only a month that I really uploaded the videos, and I make videos about me trading. Since then, the algorithm is trying to make me a better YouTuber, and is guiding me towards making better videos, but that is not my goal. That is not what I intend to do, make the greatest content. Again, why am I doing this? I'm doing this for my personal forthcoming. I'm doing this because everyone says you should be journaling, and maybe it elevates my trading in the future. I'm in the process since 2003 roundabout, and yeah, trading in the style of L. Brooks, learning from him. And this is another thing, I cannot make better educational content than he does, or I won't even make better educational content like a lot of other guys that are good editors. This is only about what it's actually about in the markets. You see charts, and this is where you perform. When I was starting out with trading, it was about 2002. There was the COVID going on, and a lot of meme coins were hyped a lot, and I bought Lunk. I bought Luna coin. I bought about, I don't know anymore, a couple of $100, and it grew to a position of 6,000 euros. And then I took half of it off, and the other half I let in. I think it was KuCoin at the time, or any other trading platform, eToro, something like this. I don't know anymore. And the other 3,000 vanished in a couple of months. They were just a couple of €100, and then I took them out again. So this was my actual first experience with trading. I made a great deal of money for me at the time, and then I was hooked. And I thought, oh, this is great. You can actually make money with this stuff. And since then, I was trying to become a trader, and I'm in the process for 4 years now, and in serious training since 3 years. But you will experience that it's not that easy. You already have a life. You already have a full calendar, and you have meetings and schedules, and you have a family, a wife, kids, and they all demand time from you. And making a thing like trading, where you really need to put the time in, what is really demanding, will surely demand a lot of time and effort from you. This is where I refer to Tom Hugart. He said in an interview why there's such a high failure rate in trading, and this is not because trading is that hard. It's just because there's a high failure rate in anything, be it a diet or something like this. You just have to put the work in, and this is where the people fail. It's not about the markets, it's about yourself. Think about it for a moment. Why are you taking bad trades? It's a lack of knowledge. What can you do? You have to be more disciplined. You have to work more. You have to do the research. You have to put more work in. That's the real problem. Not you making a bad trade, but you don't steering against it. And what's another thing that can happen? It's bad trade management. What are you doing? You succumb to fear, you succumb to greed, you don't do what you gotta do, you don't know what you gotta do. You are in a winning trade. Should it go further? Should I let it run? For an instance, if you took this trade, this is a reasonable trade. You have a second reversal at the breakout below the trading range. You have a higher low entry, and you're betting on a reversal up to all the way up. So maybe if you're very bold, you even make this one, but it's very unlikely. But you could at first aim for this. Let's say you did it. Then let's aim in. Then you see there's the first push, second push, the third push, and we get another push, and the doji bar at around the highs here. Let's make this line. And you're feeling, oh, there's something not right. This trade is not running up. You see this bar here from 61 to 47. This is 15 points. And this bar here is a couple of points, 4 points. So you see there's hesitation at the trend line. I should really get out of this trade, but you don't, because you're so convinced that you will, that you're right, that this is the great reversal you're waiting for, and you're already in, let's say 1.5. It's a 1.5 R around. Pretty much a 1.5 R. So, but you're greedy. It's not enough, and you don't get out. And the next bar is a bear bar, and say, oh, there's only one bear bar. Last bars were all bull bars, and then the next bear bar, and you have a break-even stop in effect, and the break-even stop would be around your entry there, and you get hit. And then you see this hesitation. You see, oh, it's going to reverse. This is a moving average reversal trade, double bottom inside bars. It's going to go out to buy again, and then the trade reverses against you. So this is what can happen, and this is not the market being mean to you. This is just you doing bad stuff in the market because of bad discipline, and that's why you fail. You're making bad decisions. When I first started out, I had a complete different view of what trading actually is. So yesterday I was taking this reversal scalp. My initial target was a test to the moving average, but I adjusted it afterwards after I scaled in. As I already told you, I bought around the close of this bar, and then I scaled in above this bar because the third push down in this wedge, and this already could be the reversal I would anticipate, but then we got the moving average wasn't quite hit, but I bet on a hit of the moving average and I scaled in more times going down to just lower my profit target. And this is, as you see down here, this is what happened. My first entry was a break-even stop, and my other entries made profit. And this is the sense of a scalp if you do it. You don't have to be right all the time, but as I already told you, this could really affect your win rate when you just have the half of the entries in the green, but they are, let's say you made a profit on this trade a couple of points, but still the half of the trades were red, so the trade overall was a winner, but you have still for the statistics only a 40% win rate. So this is a problem when it comes down to stats. Let's say the stats. As you see, this is a trading combine challenge. Only good so far. Average win is 300 because of the splitted trades, as I just mentioned, and there's nothing to show right now because this is an evil account, and the next day I'm trading will be Monday, but you see here it's 5 trades. What's another thing you have to consider when trading? You see, don't get distracted by the numbers on the screen. When a trader says, oh my god, I have made, don't know, 5k, 10k, 15k, 100 grand on this trade, don't be fooled by that, because you see, it's only position size. When you have a contract in the E-mini, one tick is about 12.5 points, $12.50 if I'm not mistaken. And one tick brings you $12 roundabout. 2 ticks 25, 4 ticks 50. So if you have 4 ticks, which is a point that is in the market, is very less. You see this. I can't even in this market to point out 1 point. I have to really scale in here. Let's see if I can even measure that. I don't always know how to do it because I suck at this stuff. Let's see the lineal, the ruler. That should 2 strikes. Okay. Yeah. So this is 4 ticks. Again, it doesn't stay. Let's measure this candle. This is 4 ticks. So with why doesn't it stay here? So you see, this is not really a lot. And with one contract, this would be $50. With 10 contracts, this would be $500. It's really not a lot. And if you have a demo account, you can just scale in indefinitely, no one cares. But with a real account, you have something like risk management. And if I make 2k loss on this account, it gets banned and I'm not eligible for funding and for payouts. So you have to calculate your trade size, and you see these bars are very huge. There are other times, just like this, where the bars have a size that's not even comparable. You see this bar has about 4 points, and this bar down here, the big green bar, let's take this in, the big green bar as 10, you know what is this, 12, 15 points something. So if you catch one swing of this big bar with one contract, you can calculate for yourself. So you need to assess the risk. If you have one bad trade down here, can you raise 5 good trades up here? So as a beginner, it's good for you to stay at the same market conditions. Trade London session and stick to London session if you trade London session, because this is why it makes sense to do it. Because the bars differ in size and you have to calculate this. For me, 4 years in, how do I handle this? I stick to the rule of Al Brooks to say yes. I have two position sizes, one for scaling in and one for all in, and I stick to them. Since I, on a funded account, have two contracts that I can use on the E-mini, I have my full position with 2 points and my small position with two contracts and my small position with one contract. And this is what I will do when I am on a funded account again. Why do I do this? Because then I have not to worry about what may happen. This can crush my account, as I mentioned on the video on my blown account, because when the moves are exceptionally big, even one contract can make 1,000 euros in an instant, in about, don't know, 10 minutes, 5 minutes, 1 minute, you name it. Doesn't even, there's no, the market can do whatever it wants, and it will do whatever it can. So yes, this is position sizing. So never get fooled by someone talking about money. At the end of the day, only the points count. And as Mark Douglas put it, you can put a contract on, or you can put a trade on, and you find yourself in a winning trade, and you don't have to know anything about the market, but you can call yourself a trader because you are a trader. You have a trade. As long as you're capable of pushing this button, or the other one, this one, you can trade. There's no more education you need, but it is of an advantage, trust me, if you have it. Just like here, you see this is a spike and a channel and a small pullback bull trend. It can last for a long time. So you have this spike, and it was a spike in a two-legged move up, and it staggered at the moving average, because this would be a 20 bar gap, 20 gap bar sell order actually. So let's say you took the sell order. You saw this market go down here, and you are just waiting for a pullback to get in short, and there you have your pullback. This was a double top, a double bottom, and I have no idea, because I have not the levels in here. I don't know if there's a resistance or some other level or a trend line. I have no clue. So just seeing the bars right now and the 20 moving average. And let's say you put a sell order in right at the moving average, where you would get filled around here to a retest down here, and you have to have a generous stop at the beginning. Let's say a 2-to-1, because this is a limit order trade and you don't know what happens in the limit order entry, and you won't get faked out. So you would scale in at some point, maybe the half of this profit target here. You have another limit order to get in short here somewhere. There it is. And then you have to be very quick in your decision making. I already had two. Now I messed up. Okay, let's do it again. It's very difficult to so you have half the size down here, and you would aim for the same goal. But as you have scaled in, and you see the bull bars were growing, and there's a little selling pressure. So you see this was the train or thought, or this is what a lot of people did, and you have to be quick in your exits. So it didn't even reach well, so here it didn't even reach quite the entry of your first trade, but if you were quick to exit down here, you would have managed to get out with a small profit. It would be considered a break-even trade, and but you have to be very fast in your decision making. So yes, this is where you can fail. So then you have the spike and the channel upwards, and it's easier, not easy like I just told you, but easier to make money selling in a trend like this. But it doesn't always work, as you see. But if you see this kind of move, you just sell at the market, sell at any pullback above every bar here, sell above bull bars, sell above bear bars, just sell. And the second reversal here, obviously, or the third reversal, you can consider this, even if you have a good imagination, you can consider this a wedge. 1, 2, 3, and then exhaustion down here. Maybe it would make more sense if I had the levels in, but you could call it this way. But it's easier to make money selling here, and it's easier to make money buying here. As you see developing this channel, and you can clone this here. Kind of body, stick with the body. You have a channel overshoot and a tradable reversal, but you need, if you want to make money selling in this small channel, you would use limit orders, and you would need to be a very skilled trader. You have to have at least experience of a couple of years. I did try this strategy, but you have to have the guts to hold this trade, because you could have sold above this double top here, and you would sell higher, and you could get out break even at your first trade, and you could with a win here. But it's not the easy money, you always have to think constantly, and you always have to scale in, scale out. That's not the easy way to do it. The easy way is to just, you see breakout, you have a kind of a consolidation here, but the move is mostly sideways. There's not a lot of selling pressure. You have a high one here, but this is a bear bar, so don't take the high one. You have a high 2 here, but this is not an exceptionally good high one, and after such a spike you would expect at least 10 bar 2 leg reversal. You have a high 3 and you have a high 4, and the high 4 had a pullback, even if you look at it that way. You have a breakout pullback, deeper pullback long, and then you could get long here, and the market never even looked back. You have a test of this entry here, with a huge rejection, and then just it went up. And this is where the easy money is. You don't have to think, you have just to hold and watch the market go up. And when would you get out? This could be a spike, exhaustion, reversal, and this was a spike, exhaustion, reversal, but you could get out here. But if you get out here, you have still the possibility to this being a measuring gap. And in the case of a measuring gap, you would just have the same length of this channel all the way up here, and you would probably miss out on that move, or you had to chase this move, and you don't want this. But you should at least consider reducing position size here, so scaling out. This would be a good trade management. I would personally just sell out and call it a day up here. At the latest, if you have the first reversal and the second push up after this reversal bar, this is not a measuring gap. You would hold here, and on the second bar push up, you would then get out. And this is what a lot of people did. You see here below this bar, that would be an entry short, a double top kind of move, failed flag to the upside, and this is exhaustion reversal. And the first measured, the first anticipated target would be the low of the channel, but this was obviously hit with this bar. You see here, rejection went through, then it tested the trading range here and channel down to the downside, and then it went down. This would be a good entry for a right to a two-legged move down. 1, 2, that would be your profit target here. This is where actually a lot of people took profit around this area. You see, this is where the profit target was. More probable that people looked at the profit target. Let's take it this way. Here and here, you see this would get hit also with the beginning of this trading range. And then I started trading. I started trading later yesterday because I was working. I worked a lot last week. This is another thing you have to do as a trader. Work double. You have to work your off double, because this is a profession and you have already a profession. There's a video where this guy, I think I mentioned it online before, this guy talked about fractal trading, and he said the group of traders are very smart guys, above average in intelligence. They already have a career and they have money. Why is that so? Because you need to have money to lose it in the markets, and you have to have a career to have this money, and obviously intelligent people are attracted to money. And even if money is your goal, you don't do it for the money. You do it for the competition or for whatever. You learn a lot about yourself. This will be topic of another video. What emotions do to you, but you don't do it because of the money. You can do for money whatever you want. You can be an entrepreneur or a neurosurgeon or no clue whatever you want to be for money. But if you don't like the bars, if you don't like the competition, the rush, and the work you put in, you won't get far in the markets, that's for sure. So this is where I started trading, and as I thought this would be a good spot for a consolidation or trading range even, and this is what I marked in here, and I scaled in lower and bought out at my daily profit target. I had a very generous stop loss, but I was over leveraged, so because this is only the evil account. You can do something like this, but on the real account you probably would have to pick your entries better, and yeah. I don't know if this is the right thing to do. So this would then be a kind of bear flag move, and this failed here to the downside, but got stopped by the trading range. Upside again, you could use a stop entry below that bar, but it wouldn't have triggered right away, and after this bar you would have hesitated to take this trade because it's a small bar at the bottom of the trading range. So probably more buyers above than sellers below, because markets tend to do what they already been doing, and it's been in a trading range for a couple of minutes. I don't know what this is, 2 hours maybe, 6:30, so 1 hour, 1.5 hour, and it continued to be in a trading range. And after that small bar to the upside, you would just have sold the close stop above everything here and write it down. And you see, this was a hesitating move. Market tries to keep you out of good moves at all costs. So then it staggered here, had a double top, up again, testing the upper trading range, and you see this was a broad channel to the downside, and if I traded this, it would be the same thing as always. Just clone this and you have approximate move. So this is the low probability event happening right here. You have a breakout to the downside of this falling channel, and usually this doesn't happen. So actually this would be a good reversal trade that I would have taken, but it's before the close of the market. I would have taken this trade, so I don't trade it. It is about 9 o'clock, 9:30 in the evening. I don't trade at this hours. I'm just finished. Enough is enough. So this would be a great trade, a reversal. You see staggering 1, 2, 3, 4 entry bar here. Just sell the close or sell below this bar. Retest of the entry. This is market always retesting the entries. You could even say this is the middle. Oh, sorry. The middle of the range. It's always playing around in the middle of a move like this. Let's clone this again. So it's always playing around in the middle of the range, as you see. Then broke through, but you see selling pressure reducing, buying pressure gaining momentum, as it always does in the bottom of a range. So it's always a good and a wise decision to take at least partial profits at the bottom of the range. This is one thing I need to consider as well, because I'm inherently greedy and I need to stop being greedy. Yeah. And then we get a breakout to the downside. You could also consider this whole thing a bigger trading range if you are more comfortable, or even two trading ranges, with the first one here, breakout to the downside, poke up here, and then this is a second trading range developing, but we get another breakout to the downside, but I wouldn't have taken this trade. So then let's see what on the monthly chart is going on. We are half the month in. And as you already see, this is developing a really big fat body. Let's just eliminate the chart executions, make the stuff away. So when you look at the monthly chart, we had this macro double bottom, and there were obviously sellers below here. And let's see how that turns out. Will it something like this? Would be, this is the second push up already. Is it going down now to retest all the things down here? You never. Actually, I don't have to have more data on this. This is kind of strange because it's the ES. It's not the S&P 500, so I don't have the whole data. Well, daily chart, we are breaking to the downside, but we are still at the bottom of a trading range, and even we are just strongly breaking down. You see this bar here. See this bar here, we break strong to the downside, and you could say, yeah, let's just sell below this bar at the bottom of the trading range. This is a great idea. No, it's not. Never sell at the bottom of a trading range. Wait for a breakout and the retest, and then consider what to do. And as you see on the monthly, on the daily chart, we are still in a trading range. This could be a rounded bottom, but we are actually in an uptrend, so this could be a fake out also. We are in a trading range. Don't take the sell. I won't mark my levels today. I will mark my levels when I start trading on Monday. So I'm making my daily routine. So this is my first smart talking video that I have. I am talking smart in the market. But as I already said, since I am uploading these videos, I have a lot of content suggested to me to become a better YouTuber, but I don't want to be a YouTuber. And there's maybe some projects I will do to work with pro editors and give them my thoughts and make some videos, but it's only for pleasure. I don't want to make this my work, my job, because it's a very hard work to be a YouTuber. Actually, you need to come up with ideas and make videos, and I don't want to do that. I want to be a trader. Maybe if I have a spare time somewhere and I don't have to struggle with the markets and I don't have something, but I like my job actually. I don't want to quit my job neither, because I worked very hard to be at the position where I am, and I really love my job, you could say. I don't even want to quit my job, because one of the struggles you face as a trader is, what do you do with the money? I uh, that I don't know. You don't do it because of the money. This is the money is not the thing. You just wanted to show it to the world that you are able to do it, but only if you can. This is the reason. It's not the money. And imagine you can make $1,000 in an hour or so, or in half an hour every day. In average, probabilities considered. What would you do with the spare time? It's just playing a video game and you have the hacks on. You don't have no meaning in your life, and that's not what I want. I want to have a meaningful life. I want to do something what makes sense, and this is why I don't will quit my job, and maybe I will do YouTube to help other people in the process. Something like this. I don't know exactly right now. So how did I even come to this topic? Oh yeah, YouTube, right. So YouTube suggests me to be a better YouTuber, but I don't want to be. And then I created these thumbnails for my videos, because my account on YouTube was looking pretty messy, and yeah, it's just to have a little more order in my account when I make it up. So I have the thumbnails and I see what was it, a live trade, a recap, or a smart talk. And this is a smart talk is actually nothing more than a little bit of retesting, a little bit of looking at the markets. You do this on weekends or at the evening sometimes. This is what a trader does. Don't get fooled by driving around in Lambos and certain stuff, because that's not what a lot of people do, even if they have the money. I talked to a millionaire once, and he said when he was young he wasn't a millionaire and he wanted a Lambo, and now he is a millionaire, but he's not young anymore, and he can't have a Lambo because he wouldn't be able to get in the car or out of the car mostly. So it's a dream for young people to fool them, and never trust the lifestyle or the girls, and watch out for the content on YouTube. They just want to grab you with their thumbnails and the lifestyle hook. Don't fall for that. So great. Thanks for watching and have a nice day. I wish you all the best. Bye bye.